So my name is Kirch Kumar. The next panel up that you're going to see is Emergence of Institutional FX in Crypto Field. And up on the stage, we have Harpal Sandhu and Alex Gordon from Omega One. They both are very experienced in the field that they're in, and they're both attacking the problem, or they're both coming in from a standpoint, from two different angles. Before we jump into that panel, I'll let Harpal introduce himself and tell us his background, and then we'll get to Alex.
Hi, thank you. Thank you, Kurt, and welcome everyone. So my name is Harpal Sandhu. I'm the CEO of Integral Development Corporation. And Integral, a couple of years ago, spun out a new exchange that we call Mint Exchange. So a little bit of background. Integral is one of the leading platforms in foreign exchange trading, so meaning fiat currencies. So we today process approximately $40 billion per day across 200 financial institutions around the world. And we used that same platform, extended now to support crypto, to launch Mint Exchange. Mint has been live since the beginning of this year, probably the second week of December of last year. And in the first 4 months has really started to pick up some traction. In these past couple of weeks, we've passed $50 million a day in OTC trading. And it's an interesting point, I think, in the evolution of the market.
Thank you, Harpal. Alex, do you want to speak a few minutes and introduce yourself?
Absolutely. Again, thanks everyone for coming here today, and welcome. So a little bit about my background. I spent 5 years at Bridgewater Associates, where I designed from ground up a trading platform that put about $10 or $12 billion a day of FX into the market, and learned a few things about market impact and slippage issues. And when I discovered crypto a few years ago, I found out that the slippage issues that really the largest hedge funds face in FX, you face at even large retail levels in crypto, and a lot of the same market infrastructure that has been built up in FX to solve those problems is now starting to emerge in crypto. So a couple of years ago, I started Omega One, and Omega One is a couple weeks away from launching the first dark pool in crypto. We'll talk a little bit more about that later.
Thank you, Alex. My name is Kirch Kumar. I help companies come in, do token launches. That's my day job. I quickly want to ask Alex and Harpal, what is the convergence of institutional world and institutional FX and the crypto world? Like, where are we, and what is happening currently on the FX side, and then how are we merging the crypto world, the spheres, and the FX? And Harpal, I'll let you go first because I know you run Integral and you've been in the field for the last 2 decades.
Yeah, so first of all, I'd like to, so this is my first time at Consensus, and I really do find it quite interesting because this whole conference seems a bit like a convergence of multiple facets or the multiple sides of digital assets. I mean, you guys probably see this in walking around, but you've got IBM and Deloitte talking about the use of blockchain. You've got a lot of people talking about decentralized computing based on the whole smart contract and Ethereum side of things, and then you also have exchanges and crypto assets as an investable asset class. And although that all refers to digital assets, they're remarkably different perspectives on, and in many ways are completely different worlds, even though we're all here at the same conference. So the interesting thing about institutional is institutional has always had these things. And when we looked at crypto, what we found is that in the established markets, well, first of all, in the established markets, there is a very large institutional B2B world that exists out there. The crypto markets are really quite interesting because it was a groundswell approach of what took place. I mean, this really started from people building wallets, really started from mechanisms for individuals to transact with each other, and it's been a bottoms-up approach. One of the most interesting things we find is that the technology really started on the spectrum of dealing with the individual and not from dealing with institutions. So coming from the institutional space, we actually find it quite refreshing to kind of come in and help people out in ways that they haven't been able to be helped before.
Harpal, just to give us context, what is the total daily trade volume on the FX side compared to the crypto side?
Yeah, so, I mean, in our world, we do about $40 billion a day in FX.
Right.
And I will tell you that even amongst our FX customers, if we include the derivative products that they are trading, meaning crypto CFDs, so amongst our existing customer base as it stands, if we look at the crypto risk units that they trade, including derivatives of crypto, they're trading probably 10 times the size, 10 times the notional volume of the total volume currently traded on existing physical exchanges. So it's really a very, very large market. I mean, it's in the you know, $5 to $10 billion a day of crypto CFDs.
Right.
And if we exclude some of the hyperinflated numbers of some of the exchanges, most of the exchanges put together are really only doing about 800 million to $1 billion a day. So there's a huge room, there's a huge amount of headroom that is going to take place in crypto exchanges as the FX market moves in.
Right. Alex, from your point of view, how do you see the convergence happening on the crypto side and on the FX side?
Before I answer that question, I'm always curious, again, there are so many different constituencies represented at this conference, just to do a little straw poll of the audience and find out how many of you are sort of actively involved in trading crypto today. And how many of you are actively involved in trading FX today? I didn't quite tell if those were the same hands or not. Anyone on both? Okay, that's helpful. And anyone who isn't trading crypto today but plans to be in the future? Okay, thanks, that's helpful. So, yeah, building on what Harpal said, this is crypto's very interesting because there are some ways that it maps, every asset class as it's developed and the technology has matured, has a kind of curve to it and various things that happen along the way. But crypto is a complete outlier in terms of the extent to which it was bottom-up, retail first, and in some ways the technology developed first and then the trading developed after the technology, which is not what happened in equity trading or bond trading or anything. And so there are a number of features that if you're sort of not looking closely, you might imagine would follow traditional paths, but actually don't. And one of the things in particular that I think is, that people who come into trading crypto, there are the people who come from equities and sort of assume it's going to be like equities, and people who come some from commodities. And what I think the FX folks see in crypto that some of the people from other asset classes don't is that, like FX, particularly retail FX, this is a very sort of networked, relational sort of mesh kind of business. Right. This isn't the sort of business where a single hub, a single centralized exchange hub really works. Right. And that's why we've seen persistently the public exchanges, although they get much more of the sort of the color and the noise, are really only doing a fraction of the volume in the marketplace.
Right. You said an asset class, and I saw on Twitter where somebody said, like, considering crypto as an asset class is like saying internet is just another TV channel. Can you elaborate when you say that this is in its whole new ball game? This is not like anything we have seen before. Can you elaborate on that?
Yeah, I think so. Firstly, there's two different things when people are talking digital assets. There's asset-backed tokens, which is essentially taking stuff that already exists and trading it on a blockchain. So we'll put that on one side and talk about crypto itself. It's a different asset class through a mix of sort of fundamental and technical features. I think really the fundamentals are different. People still haven't even figured out quite how to value sort of the network effect value, even of Bitcoin and Ether, let alone the smaller cryptos. It's different technically, right, because it started off with wallets and payments, and then sort of the infrastructure evolution's been different, right, and then it's different in terms of the people, as Harpal started saying that even the players who are moving very large amounts of volume around in the crypto market, there are a few traditional institutions that have moved capital into the market, but in the main, they were people who were slinging small amounts of capital around a couple of years ago and have been successful and followed the rise up. So there's sort of, let's say, institutional-like size and volume, but in much more retail-minded and kind of open-minded institutions than you'll find, moving around the majority of institutional FX.
Yeah, I think that point that Alex is raising about the diversity of market participants in crypto is really fascinating. I mean, crypto started off at the individual level. It is still largely at the individual level. And what makes this such a fascinating and rich market is there are thousands and thousands of individuals, each with their own unique perspective as to why they are trading a particular crypto asset. They exist all over the world. They exist in every time zone. They exist in basically every socioeconomic level. And they have different reasons for trading, which is why it is something we call an OTC market. And what an OTC market means is that it is a series of thousands or millions of bilateral connections, as opposed to a centralized exchange market where everybody is connected into a single hub.
Right.
And the reason this is so fascinating, two very interesting questions came to me yesterday from reporters. The first one of which was, why did CBOE pull out of Bitcoin futures? And the answer was quite simple. Bitcoin trading is not an institutional per se market. And so rolling out a crypto futures product for institutions was a classic case of, somebody is a hammer and everything looks like a nail to them. The customers didn't exist per se in that market. The second question that came up is, why has Bitcoin jumped so much in the past few days? And I'll just tell you the data we have, and people can reach their own conclusions. But two very interesting points of data. Number one, all of the movement, or a significant amount of the movement, happens during our night here, which is daytime somewhere else, particularly in Asia. Number two, Mint, which is a massive OTC ECN and is connected to 16 other crypto exchanges, can see the order flow flowing around amongst all these exchanges. And I will tell you that greater than 80% of the exchanges are failing on an average about every 60 to 70 minutes, meaning just over an hour. Every single exchange has failed. And I'll show you the email off my phone. It's just crazy because our monitoring systems are monitoring when their APIs are going down, when their queues are building up, when their prices are stale. But every single major exchange you can think about, I mean, other than Mint, and I know I'm speaking my own book here, but it's because the technology is old in the other ones, was failing. I say that not to comment necessarily on the exchange infrastructure, but it means that the volume of trades, not the volume, notional volume per se, even though that was high, but the actual number of tickets being processed was through the roof, which means there were small tickets. So, small tickets coming in the middle of our night. These are Asian retail traders. Coincidentally, within 12 hours of US increasing tariffs on a very, very large Asian nation, whose currency simultaneously dropped in value by almost the equivalent amount of the increase in value of Bitcoin.
Right.
Go figure. This is an OTC market. This is a retail-driven market. This isn't some family office, sitting down the street here on Park Avenue, deciding that they want to park, 5% or 10% of their portfolio in Bitcoin. These are millions of individual users voting. And that is the beauty and the richness of this vast, vast market around the world. It's fantastic.
So going back to that earlier question of the convergence between the emergence of institutional FX and crypto, do you feel that traditional FX exchanges, knowing that they do that many large trades and have a bigger market share, that they have an advantage when they come into the crypto side? Or does crypto has an advantage because the asset class has grown organically from bottoms up? How do you feel about that? I know that you have experience on both sides of the world, on the FX and on the crypto side. Do you feel crypto has a better advantage against traditional players?
I'll give you a short answer to that. I think Alex was talking to me outside, and he has a pretty interesting view on this also. I think they both have advantages, and the advantages are as follows. FX infrastructure, OTC FX infrastructure, and I'm not talking about futures exchanges, and I'm not talking about really futures exchanges who are thinking they're going to get into this market. The only two FX infrastructures that really exist that are really quite powerful are banks and FX platforms that served banks. That's it. The futures exchanges and the central limit order books really weren't heavily involved in FX. The banks aren't playing in the crypto space for regulatory reasons. So that basically leaves FX platforms like Integral to bring this rich, mature technology into this market. So I think in terms of the processing technology, matching technology, last mile integration technology, the FX world is significantly more advanced, 2 generations ahead, 20 years ahead of crypto. But in terms of custody and wallets and infrastructure of dealing with the individual, obviously crypto has a lot more experience there because they grew up from there. So I think each side has something to bring, and it's the convergence between the two of those in some of the efforts that are underway now. I mean, linking really high performance, large scale global OTC networks that never fail together with last mile, the individual's wallet, and not to lead the market too much, but eventually decentralized wallets, I think is just beautiful. I mean, it's such an elegant solution to a problem.
Right.
Can I just riff on that
yes,
for a second?
definitely.
So, I mean, I agree, but with a nuance. So I think in settlement space, there's a convergence because definitely the crypto exchanges and crypto custodians, they may not do the best job, but they certainly know more about security and custody. On the other hand, a lot of solutions are needed in the space that are coming across from traditional markets, like, sort of same-day settlement, margining, leverage solutions. Those kind of solutions haven't operated well in crypto. Right. So there's sort of a tech coming together on the settlement side. But I mean, one of the things people have to understand about crypto, naively, you might think that crypto merges trading and settlement because the asset moves on the blockchain, but there's still it's 15-minute settlement for Bitcoin, it's sort of 30-second settlement for Ethereum. We'll get private blockchains that have millisecond settlement, but it's never going to be as fast as the pace of trading. Yep. And you're always going to have an advantage with the faster trading, so you always need to have that buffer between those layers. And I feel like in the custody settlement world, the best of institutional FX and the best of what's in crypto are coming together to make better solutions. I think in trade space, the traditional technology providers from FX are just going to win because they have better solutions. And on the trade space, the technology stack in crypto is still really flaky, to Harpal's point, and also just not designed for the marketplace that actually exists.
A thought has just occurred to me. I'm going to go out on a limb here. I've never said this before.
I'm recording.
I really do think sometimes when I look at what is happening in this space, that it is a lot like what happened in the cell phone market. Okay, I was a gigantic user. I mean, I was one of those crackberry, users. I've had probably 15 of those things. I used to replace it every 8 months. And I'd say between 2000 and 2008 or 2009, I was even having phantom vibration on my hip, when that thing, thinking that it was buzzing. And it was a fantastic device. But what BlackBerry did was basically extend a pager to include email. And they thought their claim to fame was the physical keyboard. And it really did work well for a relatively interesting but small business niche group of people. And from their perspective, when analysts would ask them things or people would ask them things, they would turn around and say, well, we own this market, we're really great, we have a patent on the keyboard, nobody's going to touch us. And then Steve Jobs came along and just said, you know what? Those mobile devices that you guys call phones, they're not mobile devices. I mean, they're just simple little, they're silly little toys. What people really need is mobile computing. And so we're actually shrink the computer down into a device and allow the computer to do all kinds of things, including, by the way, email and your telephone calls. And it was over. You know, Google immediately copied what Apple was doing, and between Android and the iPhone today, it's like, I don't know, if there's anything close to 100%, it's basically close to 100% of the entire market, and Research in Motion really doesn't even exist today as a company. Now, at the end of the day, if you step back and frame that, well, first of all, if you look at just that period of time, 2008, 2009, 2010, there were huge religious arguments going on about, oh, no, the BlackBerry's this, and the iPhone is just this, and blah, blah, blah. You know, but if you frame back, it was very clear what happened. The BlackBerry and Research in Motion had sort of incubated an interest amongst people to have greater communication and greater functionality. But as soon as the real designs came along, it completely eclipsed the market and took it over. And you know, it's 2019 now, and it's probably an ambitious thing to say, and this is why I'm saying I'm going out on a limb. I will tell you, I think the things that are out there today, and without naming names, but I'll just name the names, but all the major exchanges, Coinbase, Kraken, Bitfinex, Bittrex, you know, Liquid by Coin, Binance, et cetera. Binance is the only one that I think is really, really quite innovative. They are all in the realm of Nokia and Research in Motion.
So you're saying that practically there's going to be a future processes, systems that's going to leapfrog.
I think we're in the bottom of the first inning, and all of these people have essentially incubated the market, and they've identified sort of an interest level and a certain amount of functionality, but systems and infrastructures and processes and institutions that are 20 years ahead of them, that have been through their decision-making process multiple times before, are entering the market. People like Mint, I think people like Omega One, and they're going to satisfy the customer in such a way that it's just going to be like night and day. And people will just shift, and a similar type of thing will happen. So this is the 2008 of cell phones.
Right. So I just can't resist riffing a little piece more on this, because I also remember back during the religious wars, certainly your iPhone was never a work device.
Right.
You know, you'd have a BlackBerry for work and an iPhone at home, and the idea of a work iPhone was anathema, and then somehow suddenly everyone had one. Yep. And this, I think, relates, if you'll forgive me going out, following you onto the rather shaky limb. When we talk about digital assets, we've been talking about crypto right now because crypto is really where all the action is at. A lot of money and investment has gone into building platforms for tokenizing real estate, tokenizing equity. I personally believe that once we have figured out the performance and custody and scalability issues in blockchains over the next year or two, there's going to be a massive shift of all of these sort of real assets to be traded in a tokenized format. So that's my sort of extension of the analogy, is that the iPhone served this retail customer base and then got so good the business couldn't help but use it. In the same way, what we're seeing, where the inning that we're in right now is, as real technology is coming into this space and hardening the experience so that you can trade efficiently, you can settle efficiently, then the technological advantages of the sort of virtualized, tokenized form of trading are going to play out in equities and bonds and real estate. And, you know, the folks who right now are on their BlackBerries would never use an iPhone are the folks right now looking at the crazy crypto people who in 5-10 years' time, there's going to be no such thing as a tokenized security, because who would trade a security that wasn't on a blockchain?
Oh, so I missed you a bit.
You guys don't need a moderator here, you know that.
No, I think, so you're saying that, you know, crypto sort of incubated the space. Smart institutional people will come into crypto, sort of eclipse what's going on in crypto and really serve that market well, learn enough from crypto as to how things should be tokenized, and go back into the institutional space and transform that.
Absolutely.
I didn't think of that. That's good.
You mentioned that we're going to leapfrog some of them, right? Where does that leave back? I mean, back last year had made an announcement that they're going to go live, and I think they had an announcement here at Consensus yesterday or something like that.
Yeah.
What do you guys think of back? And you know, based on what you were earlier saying about systems being live and the problems all the other exchanges are facing, what's your reference point for back?
I don't know where to start with back. There's no press in here, right? It's fantastic. So Bakkt is like lose, lose, and lose because they're a hype and promotion machine.
Harpal, I think I should be really taping this because you're saying certain things here that I'm like really nervous because next year's consensus is not going to ask me to come here.
So listen, Bakkt was at Consensus Invest in November saying that they were going to be live on December 15th.
Right.
It's now May, and they're not live yet. We hadn't even announced Mint. And we were live by, we announced Mint in December, and we were live in January. So number one, they're a heavily promotional machine. They were a fundraising machine during 2018, and they were just promoting something that didn't really exist. That's number one. Number two, they're just trying to recycle assets that they already have. I mean, ICE is a futures exchange that is trying to use its hammer, and everything looks like a nail. And they just went ahead and announced all kinds of things that turned out not to even be legal, which is what the CFTC has eventually told them. Now, at the end of the day, in fact, they just announced this morning that they're going to try to go live in July and to overcome the objections of their clearinghouse members. And the whole point of the clearinghouse, right, is that you socialize the risk amongst all the members. The other members, who were never told about Bakkt, turned around and said, well, we don't want to be part of it. So Bakkt is putting up $35 million of its own money to backstop the losses of the clearinghouse. Well, that's no longer a clearinghouse. That's now a broker. That's now a broker-dealer who's put up their own balance sheet to back up the assets and the losses of their exchange. So, the one piece of credit I give them is that they can pivot every single month because they have enough money that they raise to keep doing that. And so I give them that much. But the whole idea that, established existing exchange infrastructures were going to be able to deliver a service in OTC markets was just not the case. And this is being played out in real time.
So where do you think they'll end up actually being? Just another broker-dealer?
Either that or it quietly goes away and they still call it a success of something else, or they just change its name, or I don't know. Maybe they eventually do go live and they follow the CBOE route where they run it for a year and then see what happens. At the same time, they're trying to build a point of sale system with Starbucks. So, go figure. They've got a futures exchange on one side. They're dealing with CFTC regulation and clearinghouses, and they're trying to compete with, Verifone for swiping machines and Square with swiping machines. I don't know.
All right. Nobody's from Bakkt here, right? just checking. Alex, I know we are talking about institutional FX and crypto, but I'm curious about that dark pool part that you originally said in your intro. Can you give us a quick background to that?
Yes, so thanks. So there are things called dark pool or midpoint matching or risk netting services in every other marketplace, and equities to a very great extent. These kind of services grew up to meet the issue across the existing exchange infrastructure that it still wasn't possible to trade discretely in large size. So there's a core issue in crypto that when you try to trade, the market moves away from you. Someone described it to me last night as, when you put your foot into a pool full of minnows and they sort of dart away from you. That's kind of like what happens on an order book if you're trying to place a large order to do something. So you've got two choices on the public exchanges. You can either take the liquidity that's there and it's very thin and it'll start to disappear. So if you want to trade you want to buy a large amount of Bitcoin, by the time you've bought it, the price has moved up a chunk. So you may have paid a 10, 15 basis point fee on the exchange, but you've gone and paid 50 basis points or 100 basis points in the average cost before it comes back. Or you can just sit your order on the other side and patiently wait, and then the market's just going to see it and sort of move around it. Or you chop it into small pieces and you try and put it in the exchanges. And that works. There are a number of firms that are starting to build those kind of services in crypto. But there's a much simpler way to do things that has had success in other markets and doesn't yet exist in crypto. And that is a midpoint matching service, aka a dark pool. And in simple terms, if you're a large seller and you're a large buyer, and you both have a piece to do, and if either of you go in the market, you'll scare the market away. We provide a place that is, The dark part of it is we can match you at the exact market midpoint. Nobody needs to know, the market doesn't run away. But the sort of the piece where we're bringing dark into the light is full AML, KYC, regulatory, clearance, and we're actually going to be using the blockchain to provide additional pieces of transparency into what's going on that don't exist in dark pools in equities and FX. So that's why the market needs a dark pool.
And where would Coinbase, I mean, I'm just thinking out loud, like wouldn't Coinbase or Kraken and or Mint, wouldn't you also would like to have your own dark pools to assuage that concern, that if you're moving large chunks of trade volume, that it doesn't move the market one way or the other?
Well, what's interesting is if everyone has a dark pool, you just create more fragmentation.
I see.
So there's two things. Crypto is all about network effects. That's really the value of crypto tokens. And trading is the big sort of network effect marketplace. And so one single dark pool that is linked into everybody and has the right sort of network is much more useful than a fragmented set of small ones. So our job is essentially to act, it's almost like a central warehouse to clear liquidity,
right,
where the stores are all selling, like the exchanges and brokers are selling liquidity to their clients, and we sit in between them and help them warehouse their positions.
A simple answer would also be that it's technology. A dark pool is harder to build than a lit pool, and the lit pools, I can tell you right now, most of the existing ones out there don't function very well. So it'll take them a long time to build something like that.
I should actually say on that note, there are 4 or 5 companies that claim to have dark pools in FX between San Juan Mercantile Exchange, Kraken, Gemini, etc. None of them are actually dark pools. They're just basically lit books that have had the price feed turned off. A real dark pool requires building a true mid-price for the market and building, again, very sophisticated algorithms around it that enable the matching process to work, and nobody before us has done that yet.
Got it. Well, I know our time is going to be up, but I want to leave the audience members with a couple of takeaways. So Harpal, I'll ask you first. People who are trading today and people who are looking at crypto exchanges or they're in institutional FX market, what are the 2 things you would want them to look out for in the near term, let's say in the next 30, 60 days, and in the next, let's say, 12 months? So when they come back here at next consensus, they'll be like, yes, Harpal, that advice was really valuable.
Right. I think the most important thing for a trader is really the service level they get from their service providers, from their vendors. It's that simple. And what is service level these days? It is all based on trust, first of all, but it is quality of execution, which means the price that you're actually paying, the market impact of the trades that you're doing, and all the things that go into best execution. The second is the security and the safety of the assets that you have there. And the third is the reliability and the availability of the systems, meaning that when the market is moving, when it is most important for you to be able to transfer risk, to get out of your position or to get into a position because there's an opportunity, the system has to be available. And I think, whether people want to acknowledge this or not, most of those things don't exist in the crypto market today. I mean, they just don't relative to established markets. I do believe that firms, like Alex's, we'll see after they go live, like Mint and other people from the FX market that will come into crypto, will transform all 3 of those areas. And a year from now, I would be astonished if people weren't, 80% of trades weren't happening through systems like this, either through significant upgrades of existing platforms or new platforms coming in and just taking market share.
And for people who are not trading, who are not in that space, people like me, what would your advice be? What should I be looking out for in the next 60 days and a year from now?
Well, if you're not a trader and you know that this is going to happen, you should become an investor in the companies that are going to succeed. But we're really just focused on our customers, and our customers really are people who need to transfer risk. Whether they're OTC desks or their family offices or they're individuals or they're large exchanges that will eventually, just become brokers. you know, who knows? Maybe some of the very large exchanges today that run their own central limit order books, a year from now, will change their names to become brokers, like Charles Schwab and E-Trade, and use people like Mint as their actual exchange in the back end.
Got it. Alex, I'm going to ask you the same question. So people who are in the trading field today, what is your 2 takeaways for them to take for the near term and for 1 year?
I might not answer the matrix question exactly as asked, but I think there's, I agree with everything Harpal's saying, and then I think there's one more interesting thing one thing that should be of interest to traders and non-traders alike, which is that this next year we're going to see the issuance of crypto tokens from Telegram, probably from Facebook, from some of the large messaging platforms over here and in Asia. And suddenly, like, there are fewer than 1 million Bitcoin addresses right now, so it's still, what's that, like about 2 basis points, 2% of a percent of the world population has a Bitcoin address. There are single-digit, double-digit percentages of the world on each of those individual platforms.
Right.
And so I don't know what that's going to do, but it may well do something pretty significant to the whole space.
Got it. Well, Harpal, how can people reach out to you? I know I do see this, but can they actually reach out directly to you if they have questions? How can they reach out to you?
Yeah, you know, listen, I'm very passionate about this space, and I love talking to people about what's happening. And yeah, so just send me an email, really, just harpal@mintexchange.io. And
So Harpal, that is Harpal. It's not Harpal. So just don't make that mistake. It's Harpal @mintexchange.io.
oh my God.
Alex, how can we reach out to you?
I mean, likewise, always happy to engage in dialogue. Alex at Omega, OMEGA.1, ONE.
Thank you. Appreciate it, guys.
Yeah.
Thank you.
Thank
And if you have questions, you can.
Thank you.
They'll be on the floor. We have to get on to the next panel, so thank you, guys.
Hi, my name is Nikhil, and today I'm going to be talking about Oben, our AI company out of Los Angeles. And quick story is that I have young kids at home, and I realized that whenever I would travel, my kids would miss me a lot. So I felt, what if there was a copy of me back home, a copy of me that looks like me, it talks in my voice, it has a personality like mine, and it can do things with my kids which I might not have time to do. So this was one of the inspirations of starting Oben. So Oben is an AI company, and we have investors like Tencent and SoftBank backing us. It's what's referred to as a full-stack AI company, which means that all the components of AI which are required to make a digital avatar, a copy, which we refer to as Pi, or personal AI, are all integrated together into one. And we're based in Los Angeles, over 55 people in the company, and heavily patented technology with lots and lots of high-profile folks, highly qualified folks working on this sophisticated technology to bring it out to the masses. And we realized that, with this kind of a technology, how can we actually package it well into an app? How can we bring it all together? And but instead of me saying it, we put together this video demonstration as well, which you can also have it in the form of an app. So this is a quick video, and you can check it out.
Greetings, everyone. My name is Satoshi. Over a decade ago, the world was introduced to a vision for a trustless financial system built upon the principles of decentralization, privacy, and community. In the 10 years since the public conception of Bitcoin, I've had the pleasure of watching blockchain's meteoric rise to become one of the most transformative ideas in modern history. From the unbanked to the wealthy, Bitcoin has empowered millions through freedom from censorship, inflation, and unfair banking practices. Its core technological principles have been harnessed to provide identities for the stateless, give voice to the disenfranchised, hold accountable the powerful, and empower those who are not. Now, combined with the cutting-edge AI technology that has brought me to life, we introduce a new platform for the open, equitable, and expedient transfer of knowledge. By embracing cryptocurrency and blockchain technology, we support a better digital future, one with free and unobstructed dissemination of information. We are all Satoshi. Welcome to Pi News. Hosted by me, driven by you.
So everything you see here actually is made by Oben's AI. The face, the voice, the expressions on the face as well. And now we are now using this actually to create very new, powerful content, which is going to be available to you on phone. So today we are also launching our app called Pi News, P-A-I News. You can go to pinews.com. We're going to show you some links later on, and you can download it and start using it for personalized AI content, short-form content made and delivered by AI to you on your apps. So in this case, Pi News actually is going to be having different channels in areas of entertainment, lifestyle, gaming, technology, travel, and news, and all of them driven by AI newscasters. Everything is going to be created with AI tools as well, and available as an iOS and Android app. So some of the things that are going to be available in Pi News are day-to-day stuff available, generated by AI. Initially, we have several exchanges which have given us content. There's going to be law firms and academic institutions also which are providing content. We also work with some of the top entertainment companies as well across Asia and Europe, which are also providing us content. Everything is in real time, on demand. So some of the current partners that we have for this content is Project Pi, which is a leading blockchain protocol, and it's doing a lot of state-of-art research for combining AI and blockchain. Huobi, which is a global leading exchange as well, and they have a big presence in Consensus today. Fenwick & West, which is a leading law firm, which is providing a lot of guidance on blockchain-based companies, and NCR, which is like the Harvard of Europe, but is also providing lots of content for this news platform today. So the reason we are at Consensus is that we wanted to show how AI, or in this case, personal AI, could actually work off the blockchain. And we started realizing that this personal AI that we created, these avatars, they're they are like your identity. They have your data as the founding block. And we realized that in order to properly manage your IP, your copyright, there has to be some sort of a ledger behind it, which is why we researched many different protocols, many different management systems, and then we decided to use Project Pi's blockchain. A lot of info about Project Pi's blockchain and about IP management can be found on the Project Pi website, projectpi.com. You can scan the QR code, and a lot of the information about the copyright management itself can be found on pichain.info. So the reason that Oben also adopted Project Pi is that it is a completely trust-free data sharing protocol. And it is also actually utilizing a proof of useful work, in this case, utilizing computational resources to solve AI problems, machine learning problems, and it has its own data storage protocol as well. So this is the page for Pi News. You can go check out on iPhone stores as well as Android stores, or scan the QR code. We would love to get some feedback from you guys after this as well. And please go to pinews.com and download the app and check it out. Thank you.
Thank you, Nikhil. Appreciate it. Next up, we have Issac from Tide. Come on up, Isaac. You have the clicker, and I'll hand over the mic to you.
Okay, great, thanks.
Thank you.
No worries. Sorry? You guys would have gotten it. You don't have it. Sorry, I can email it to you again.
Why don't we give them the presentation, and I can get John to come up from Sentinel. John, do you want to come up?
Been dying to.
All right.
Good afternoon, everyone. My name is John Kirk. I'm with Sentinel Protocol. Our company's based in Singapore. We have a focus on Asia, and we're working in other parts of the world as well. My presentation today is entitled Crowdsourced Threat Intelligence for Blockchain Security. But before getting into the presentation, I'd like to simply welcome all of you and thank you for your time today. Reading the news, I'm sure you're well aware of the continuing incidents, hacking incidents, that are occurring in terms of crypto exchanges, wallets, and other types of companies. In the last several years, we've seen over $3 billion worth of currencies hacked and lost. Just last week, there have been incidents at Bitfinex where approximately $400 million was lost, misplaced. People are trying to find it now. And in addition to that, Binance lost $40 million. But all of these incidents add up to people being afraid of blockchain applications in crypto. We've analyzed this. We find the core technology is actually quite secure. It's the dApps and the other connected applications that have security vulnerabilities because they're managed by people. We're committed to addressing this problem. Second problem is that there's a missing piece in the crypto world, and that is cybersecurity is left up to the individual or the organization. When an organization or an individual suffers a hacking incident or a suspicious network activity, there is no generally trusted organization they can turn to mitigate that event and to address it. So this is a second problem that we are committed to addressing. Before I get into my presentation, I'd simply like to express my sincere thanks to the various companies that have stood shoulder to shoulder with us as we did our ICO, built our company, developed products, and brought them to market. Sentinel Protocol is focused on equipping organizations and individuals with advanced security systems and services leveraged by decentralization to provide ironclad security powered by the blockchain. So far, since January 2018, when we became legally registered, we have developed 4 different products and brought them to market. As a result, today we have over 2,000 users amongst organizations and individuals around the world today. Our core product is called the TRDB. That is short for the Threat Reputation Database. This is the world's first collective, crowdsourced, decentralized database containing threat intelligence, whitelist and blacklist, that is available worldwide, cross-country, across large organizations, small organizations, and individuals. It contains whitelists that include, for instance, a safe wallet address, or URLs, URIs, that don't have phishing and malware, and other types of social websites that can be trusted. On the other hand, it also has blacklists. And those blacklists also include things such as dangerous wallet addresses, sites that are associated with phishing and malware, as well as social websites like Twitter, Telegram, that have been associated with fraud. As we all know, when we utilize conventional cybersecurity systems, the support and the intelligence we receive are limited to the company that we receive. within cybersecurity. So we have another product that's called the ICF API. ICF stands for Interactive Cooperative Framework. Now this API can be connected to and integrated into a financial program, for instance. And so when you're accepting a deposit or you're making a remittance, wiring proceeds from a sale, what you can do is use our API to proactively see whether or not the wallet that is looking to make a deposit or you're making a remittance to, whether or not that's a safe or dangerous wallet. And based upon the results, if the alert is high, you discontinue the transaction. If it's medium, you broadcast an alert to the operator and step the transaction through step by step. And if it's low, you just continue and process the transaction. But this way, organizations can utilize this tool for risk management, for regulation compliance, and this can help them to build their business in a very safe, reliable manner. Now you can take the same product and, if you will, you can build an ecosystem, a holistic approach to connecting various types of banks, trading systems, insurance companies, and other organizations that have valuable digital assets or cryptocurrencies, and you can protect those as well. So you can build an ecosystem that is stable and builds on growth over time. Another product that we have that we've just recently released is called CATV, and I think you'll find on your seats there's a postcard that enables you to sign up and receive a free copy of our beta version, where CATV, which basically stands for Crypto Analysis Transactional Visualization, allows you to analyze, visualize, track the flow of Bitcoins across the blockchain. So it will show for any designated wallet address, from where is it receiving Bitcoins and to where is it sending Bitcoins. Currently, the system only supports ETH or Ethereum, but by the end of this month, it will also support ERC20 tokens. And in addition, further after that, we will be adding on support for Bitcoin, EOS, XRP, and other cryptocurrencies. So this can help people with auditability, with trade management, and regulation management. So now, looking at this particular screen, you can see that, oh my God, CV of Binance is looking to give away 10,000 Ethereum. But hold it, this is not true information. This is actually a scam. This is a Twitter giveaway. And right now, I'd like to run the video, gentleman in the back, and show you a quick 1-minute video on how we could use our CATV to actually understand what's going on. Video, please. Okay. Thank you. So basically here we're looking at the system. We have our GUI analysis system. We've got a wallet address here. We're going to take that. We're going to input it into the control panel. We're putting the distribution depth as well as the source depth of 1 so that we can see who's been scammed. We have a date range and transaction limit. The system will then come up with a visualization that shows over on the far left for me, or on my far right, excuse me, the people that fell for the scam. It will also show how much money they remitted. If you look at down in here at the bottom, it shows 9.1 Ethereum was total scam, but various people contributed 3.1 Ethereum. So basically, what this system is doing is allowing you to see who fell for the scam, what were the relay wallets, and where did the Bitcoins end up at for deposit into an exchange for payout. So you can trace things, you can audit, and it will also show you in the production version the transaction list used for the visualization. So you can use that to further analyze the data that's presented to you. So moving on. Here, as I mentioned last week, Binance was hacked, and we have a system that we put together, a dashboard, reporting statistics about this hacking that shows a live update on transactions related to this hacking incident. And we can see that 7,070 Bitcoins were stolen, and we can see the number of wallets that were involved. You can get updates But in addition to that, it will show you the total number of transactions and then when the last or more recent transactions occurred. And then it shows a visualization over to the right with different types of information about the different accounts that are available, that were involved in the flow of these Bitcoins. But if you look at this closely, you can see also that the system is showing you that there is a mixing and tumbling that is going on. And then after the mixing and tumbling, where those stolen Bitcoins actually ended up at in terms of the deposit at the exchanges. So this is a very useful tool in terms of helping people to understand the behavior of wallets, to audit transaction, and to manage trade risk. So here I have a use case. This is a company that produces a wallet in Korea called Bitberry. They're a subsidiary of a company called Root1Soft, and that's a subsidiary of a company called Dunamu, and Dunamu is one of the primary investors in a company called Upbit. So they're using our system, and they're a major exchange. Another one is a company based in Singapore called Regulus. They have a wallet called the Midas Wallet. They have been our partner since October 2018. This company has found that by including mention of security in their marketing campaigns, the number of clicks on their marketing campaigns has soared over 100%. And in addition, they have received feedback from their users saying, because of your system, we've been able to avoid scams from people that have been trying to steal from us. So the key benefits are this system provides a means to share real-time intelligence, to receive it, to block various types of malicious attacks, to detect fraudulent transactions that are being offered to you before you suffer the consequences. It is a community site that is available for worldwide reporting of security intelligence. It allows different type of parties, from individuals to white hat hackers to financial firms and other firms, to collaborate. And in the end, it provides enhanced stability and growth. So with that, I'd like to say thank you to you all. Here are the contact details for Sentinel Protocol. Please contact us. We'd be happy to help you if we can. Thank you very much.
Thank you, much appreciated. Oh, thank you. Isaac, you're up. Thank you.
Hi, everyone, and thanks for coming. My name is Issac Elnekave, and today I'm going to be talking to you about the concept of making privacy profitable. But before we do that, maybe we just take a look and think of a different concept, the concept of welfare, of providing assistance to the disadvantaged members of our society, a concept that's probably been a foundation of civil society for quite a while now, but also a burden, a never-ending cost base, and something that you and I subsidize through our taxes. What if we were able to create a system, a protocol by which the act of giving assistance, of providing welfare, is profitable to the individual and also profitable to the entity? What would happen? We would eliminate the need for welfare. We would solve the welfare problem globally. We might be daydreaming at consensus, but today I don't have a solution for welfare. However, what if we switch privacy for welfare? What if we were able to create a system or a process by which the act of allowing you as an individual to control your data, who uses it, and what for, if that very act itself was profitable to business? Imagine what would happen then. We would solve the global personal data problem, because it would be adopted, and it would be adopted quickly, because it is financially viable and profitable for businesses to trade on your privacy. We're not daydreaming in consensus. Tide is bringing that reality to you. But the reality also is that privacy is inconvenient for a business. It's stopping me from getting to know you at a very intimate level so that ultimately I can sell more products to you. The cost of compliance is exceptionally high with privacy regulations. And really, if it was moral and legal and ethical, I would be bugging your life. I would get to know every minute detail about you. but it isn't. So as a business, I provide you with the illusion of privacy. Meaningless terms and conditions and privacy statements, privacy settings that ultimately harvest more and more information about you. And I do this because data is valuable. In fact, personal data is the most valuable asset class of your lifetime. Demand for personal data is growing exponentially every day. But the supply of personal data is constrained. Privacy regulations globally, whether it's GDPR or e-privacy or HIPAA or COPA, are limiting the amount and type of data that is available in the marketplace. So Economics 101 tells us that increasing demand and a steady or constrained supply means that you are building the most valuable asset class of your lifetime, your personal data. But unfortunately, that asset class is not controlled or monetized by you. It is controlled and monetized by businesses. And those businesses are now finding that that asset is also becoming a liability. And it's becoming a liability because, like everything valuable, we need to protect it so that people don't steal it. And that costs us money. And ultimately, we will fail. You will be hacked at some stage. And consumers are becoming more aware. Whether it's Facebook or Marriott or Cathay Pacific, they don't trust that we're going to take care of their data. And as a result, they don't give us complete data. Or they may give us false data, which creates another problem, and that is that today's consumer has such a short attention span. They want to be able to get the right marketing, the right product, the right services, just at the right time. And if a business is getting incorrect or inaccurate or incomplete data, they're not able to provide that. And as consumers, our attention span is just so short. So we leave. And compounding all this is privacy legislation, which is exceptionally expensive to comply with, yet still does not remove the liability of holding data. And with privacy legislation now comes the need to know your customers, which means that they're providing more and more information to us, which starts this whole vicious cycle. But what if there was a different approach? An approach which allows businesses to continue to collect and analyze and monetize the data about you, but that can do that in a data breach resistant manner, in a privacy compliant manner, and in a way that incentivizes consumers to provide more and more accurate data about themselves. All of this in exchange for providing the control and the monetization of that data back to the consumer. We believe that there is an opportunity for a new open source, free to use protocol which creates a global standard owned by none and contributed to by all and underpinned by a decentralized, trustless network that provides a level playing field. A standard that allows businesses to continue to collect and analyze and action your data, but at the same time that encrypts that data in a unique manner and provides you as the consumer with the only key to decrypt that data, providing you with the ability to control and monetize your data. And a standard which allows seekers to have certainty over the source of that data and to engage with the audience without harming or losing the population. A standard where the revenue is shared between the businesses who trade on their insights of data and the consumers who trade on the right to be contacted. At Tide, we believe that the solution to the global personal data problem is not through legislation, And it's not through outraged consumers, but instead it's through the deployment and adoption of a protocol that provides a commercially viable and sustainable solution to trading on privacy. Thanks for having me. If you got any questions, we can have a conversation afterwards. Thank you.